Kaspa has just secured a new exchange listing on HTX, which was formerly Huobi. And on the surface, this might just look like another exchange announcement. But once you zoom out, this actually tells us a lot about where Kaspa is heading, how the project thinks about growth, and why this matters not just for investors, but also for miners and long-term network health. This isn't a hype listing, this isn't a number go up type of event, and that is exactly why this is important. In this video, I want to talk about what HTX is, why Kaspa choosing this exchange matters, what it changes for investors, what miners should be paying attention to, the risks people are ignoring, and finally, why this fits into Kaspa's broader strategy, especially when you remember that Kaspa didn't rush into other major exchange listings. So let's get into it. What actually is HTX? HTX is the rebranded version of Huobi, which has been around for a long time in terms of crypto. And while the name change caused a lot of people to mentally downgrade it, the reality is that HTX still has significant global reach, particularly out of the US and Europe. This is important because Kaspa has always been strong in grassroots adoption, mining communities, and technically focused users. But access has still been fragmented depending on geography. Listings like this quietly solve that problem without changing Kaspa's fundamentals. HTX isn't a meme exchange, and it isn't a small one either. It has infrastructure, liquidity, pathways, and long-standing users. What it doesn't have, and this is the key, is a reputation for aggressively demanding control over a project that it lists. That alone should already make this listing stand out. So why is this listing good for Kaspa? Kaspa's entire identity is built around decentralisation, fair launch principles, and resisting the kind of shortcuts that hurt projects long term. So the most important thing here isn't that Kaspa got listed, it's how it got listed. This looks like a listing that didn't involve massive token allocations, artificial market making pressure, or behind the scenes influence over development decisions. Instead, it looks like infrastructure expansion. Kaspa isn't trying to funnel all liquidity into one dominant exchange. It's deliberately spreading access across multiple platforms, so no single entity controls price discovery. And that is something that most people don't appreciate until it's too late. A single massive exchange listing can boost price quickly, but it can also distort incentives, centralize power, and make a network fragile. Kaspa is choosing the slower, more resilient route. That's not exciting in the short term, but it's incredibly powerful in the long term. So let me tell you why this makes sense after the Binance decision. A lot of people misunderstand Kaspa's previous decision to not rush certain listings. They interpret it as rejection, when in reality it was about terms. Kaspa has never said no to exchanges. It has said no to unfair deals. The HTX listing reinforces that narrative perfectly. It shows that Kaspa isn't avoiding centralized exchanges, it's selecting ones that align with its principles. This is the difference between growth and growth at any cost. When you see a project carefully choosing infrastructure partners instead of chasing headlines, that should tell you how confident they are in their technology. So what does this mean for investors? From an investor perspective, this listing matters in a very practical way. First, it increases accessibility. There are users that simply couldn't buy Kaspa easily before, especially outside of the usual Western exchanges. That friction matters more than people think. Reducing friction doesn't guarantee price movement, but it removes barriers. More venues means more buyers and more sellers competing, which generally leads to healthier price discovery over time. That's especially important for a network like Kaspa, where emissions are still ongoing and miners are regularly selling rewards. Third, it strengthens Kaspa's legitimacy without overexposing it from an established exchange. This is a quiet vote of confidence from an established exchange without the project surrendering leverage. However, This is where expectations need to be realistic. Listings don't create value, they unlock access to existing value. If someone is buying Kaspa purely because of this listing and expecting an immediate price explosion, they're likely misunderstanding what kind of asset this is. Kaspa tends to reward patience and not reactionary trading. You often see volatility around launch as arbitrage traders move funds between exchanges. You can also see sell the news behavior from people who bought earlier and simply wanted an exit with better liquidity. None of that says anything about the health of the project. What matters is what happens after the noise dies down. Does volume stabilize? Does liquidity remain consistent? And do miners have reliable routes to convert rewards? And those are the signals that actually matter. So why is this important for miners? This is where the HTX listing becomes much more interesting for people who mine Kaspa. Miners don't benefit from hype. They benefit from consistent demand. Every new exchange listing creates another outlet for miner rewards to be absorbed by the market. That doesn't mean higher prices instantly, but it does mean reduced friction when selling, swapping, or managing exposure. More importantly, stronger liquidity makes mining economics more predictable. And that's critical for anyone running hardware long term, especially in regions with higher electricity costs. However, there is also a flip side. Listings attract attention, and attention attracts new miners. That can temporarily push hash rate up and compress margins. If you're mining inefficiently, listings like this can actually make things harder, not easier. This is why Kaspa mining increasingly rewards efficiency, power optimization, and long-term planning, not just throwing hardware at the network. In other words, nothing fundamental changes, but competition does. Another thing that needs to be said clearly is that this listing doesn't change block rewards, emission schedules, or protocol mechanics. Kaspa's monetary policy doesn't care about exchange listings. What listings change is how smoothly the market absorbs supply. That's a subtle but crucial difference. Strong absorption reduces violent price swings and supports network security over time. From a miner's perspective, that's actually one of the most bullish outcomes: stability. Most people are still trained to think in terms of single catalysts. One listing, one announcement, one upgrade. Kaspa doesn't operate like that. Kaspa is being built like infrastructure and not an advertising campaign. Infrastructure grows quietly until it's suddenly everywhere. This HTX listing fits into a much bigger pattern. Gradual expansion, technical credibility, and refusal to trade long-term resilience for short-term hype. That's not exciting for speculators, but it's extremely attractive for people that are thinking in multi-year cycles. So, Kaspa being listed on HTX isn't a moon event. It's not a pump signal, and it's not meant to be. It's one more piece of infrastructure falling into place. For investors, it improves access and liquidity without compromising principles. For miners, it strengthens demand pathways while increasing competition. For the network, it increases decentralisation and resilience. This is what responsible growth looks like in crypto. And it's why Kaspa continues to stand out in a space that often prioritizes speed over substance. If you're here for quick hype, this probably won't impress you. If you're here for durable networks that survive multiple cycles, this matters a lot. Let me know in the comments how you're currently approaching Kaspa. Are you mining it, holding it, or just watching from the sidelines? Check out my previous video about the rejection of the Binance listing and why it's a good thing for Kaspa. If you found this video useful, drop a like and subscribe for more Kaspa and mining content. I will see you in the next one.